Some things in the former Soviet Union have not changed much. But many things have changed a lot. Not every country has been able to move at the same pace. And the CIS today is a very heterogeneous place. So what factors explain success to help cities drive economic growth as they are doing elsewhere in the world? First, there must be the right framework for growth. Institutions which facilitate economic activity, rather than lumbering bureaucracies which put obstacles in its path. Georgia has done particularly well at this. It scores the highest of any East European and Central Asian country in the World Bank's Doing Business indicators, and has seen GDP growth of 9.3% annually in the last few years. Its reforms include land use regulations that now mean documents are submitted only once, rather than to several different ministries, and it introduced a principle that silence is consent. If an applicant for planning doesn't receive a government response in a set period of time, she is permitted to assume that the response is positive. New government buildings and police stations are built with big windows to signify transparency. The idea is that citizens can actually see what is going on inside. One of the aims of urban land regulations must be to ease the process of moving from this to this, while still protecting unique cultural heritage. Here in Tajikistan, similar reforms have started promoting urban development. So with good regulations, we ought to see industries developing. What kinds of industries? Well, that varies by location. Some places are unlikely ever to be more than market towns, with a bit of business from passing trade. Other places have the right mix of comparative advantages and location to become leading cities, either through manufacturing industries or through services like tourism, finance or insurance. Transport links are an important ingredient of that economic success. As more people get cars, and bigger cars too, city roads are becoming congested and inefficient. Kazan, Russia, is one of the cities investing heavily in its transportation system. It opened a new subway in 2005, invested in a new fleet of city buses, and is building a high-speed tram network where average speeds are increased from 16 to 26 km per hour with a top speed of 80. But the most crucial parts of a transport network, at least before cities become as large and congested as Moscow, Tashkent or St. Petersburg, are probably between cities. These road and rail connections reduce the time and cost for firms in one city to reach markets in other cities. They expand the effective market range and thus are crucial for firms to grow. So that's road links, railways, and also air links, which join service sectors and managers across the world, no longer just from each country to Moscow, but now to Istanbul in one direction, Europe in another, and China in the other. The last component of connectivity, but one of the most important, is the regulations and border controls which currently hinder trade and economic activity all over the CIS. They're one of the reasons why industry in Isfara, Tajikistan looks like this. But just 50 kilometers away on the other side of the border, industry looks like this, where Daewoo, Uzbekistan makes car parts and where the towns feel like they're thriving with commerce. Now, what about the environment? Competition in international markets actually necessitates better efficiency, and it seems that firms in CIS countries often underestimate how much improvement it's possible to make. Meanwhile, another Soviet legacy is badly insulated and energy inefficient apartment buildings. This is a problem from Central Asia to the Caucasus, and from the borders of Mongolia to the borders of Europe. When heating meters are installed, households use around 25% less energy. That's partly because the old systems don't even let residents control how much heating they receive. At the scale of the former Soviet Union, these savings are pretty huge. So then the final question, how do you finance it all? This really is a difficult challenge. For example, a Ukrainian heating company taking a commercial bank loan to replace its pipe network is required to pay interest rates of 25 to 30% per year. Some countries have it easier than others. Kazakhstan, for example, can draw on oil and gas reserves and has thus been able to finance some spectacular projects. Here are a few in its capital city, Astana. But the financial constraints on most CIS countries mean they need to be a bit more innovative. Heading back to Georgia, one example is its Municipal Development Fund, which lends money to towns and cities all over the country for basic infrastructure works on water, sanitation and roads. Over time, it's becoming financially autonomous, no longer requiring money from international donors and funding itself from repayments on previous loans. In conclusion, all over the CIS, the journey continues.